Monday, March 10th, Stan Ehrlich. This is market analysis. Good morning. Almost 10 o'clock California time. Well, no surprise. The double top or the top formations, and they're mostly double tops, that we have seen form, watched them develop, break out to the downside, and continue again today with new lows for several months. In this case, the E-mini, since last September, we have new lows today. And the last couple of days, pretty much the same statement. But we are now halfway, or maybe even a hair more than halfway down to the minimum downside objective, which is 54.50, give or take a little, which is what I've been saying for 2 to 3 weeks, somewhere in there, maybe even a little bit longer than that. The double top actually started to form on January 24th, so it may have been all of February that I was talking about the downside objective. Nevertheless, on schedule, doing fine, doing exactly what I was looking for. I am now very oversold. Well, okay, the E-mini is not very oversold, micro E-mini. They're the same. This is the ES E-mini. It's not super oversold, but below 25, oversold. That definitely implies that we are going to have very soon in time, usually, a rally. Now, it could be a very small rally. It could be very short-lived. It could be one or 2 days, or it could be substantially longer than that. Kind of depends on other factors. I would not be going short, for example, at these levels under these circumstances. I would be looking for buy signals, which seems extremely unlikely today, considering we are down about 13 points, or 130 for the E-mini. Oh, pardon my cough, and a micro E-mini also. Totally and clearly a new low ground for the break. Now, on Friday, we did the same thing. It closed on a strong note, higher on the day, and I would have said, excuse me, on the close that we probably were going to see more strength. Well, we know the reasons why. Doggone it, dry throat this morning. We're not getting any more strength, tariffs. And here we are. So the last stages of a bear move, bear market, bear move, sharp downside technical correction, all about the same, oftentimes contains a very big, sharp down day and sometimes gapping down, at least for those markets that have a shorter trading time frame instead of 23 out of 24 hours, like the micros and the electronic futures contracts of the stock indexes. So I would not be surprised to see it gap down here the next day or two. Hopefully, it'll get down to the minimum objective, again, 54.50 approximately, in that process, and then turn around. But I can't guarantee that. I just know that that is not unheard of. And we're definitely in the process, if it'll continue, to do that kind of thing. Otherwise, again, I'm not going short down here. That's for damn sure. I would be looking for reasons, and I got plenty of them, to lower my protective buy stop if I was short and lock in a bigger profit a little more quickly than I have been for the last couple of weeks. Again, if you were short. And we'll look at the 1 minute chart. Just made new lows. Heading south, what can I say? On the E-mini, next chart, we are low and last on the SPY, as you would expect. Looking very weak. Now breaking slightly below current ticks, a minor support level based off of a few highs and some lows back in June, July, August, October. Okay. Didn't seem to have much effect on the market, that's for sure, at this point. So we're in a free fall, basically. And that's very, very difficult to predict when you're going to end up forming a bottom or hitting a low and bouncing substantially. Let's look at the 1 minute chart for the spider. As you would expect, Tierra del Fuego heading south. So QQQ, pretty much the same story, except we are about to hit the bottom of a support area in oversold condition, which is pretty much one of my favorite combinations. So that is a little bit more likely, in my opinion, to have a bounce real soon, both in time and price. So I wouldn't be surprised if today was a minor, for a few days, low day, especially because of the way the QQQ chart looks. And going to the 1 minute QQQ, a little tiny double bottom maybe, that's so small. I'm not putting any faith in it. Natural NQ, the futures contract for the NASDAQ, is low and last, coming close to a support area. And I might mention that in both cases, of course, we are way more than halfway to the minimum downside objective. So it's almost reached the levels I expected it to. And these downside objective lines, the yellow dashed lines, have been on my charts for weeks now. So no surprise. And the 1 minute chart, we just made new lows. And now let's look at the YM. It's kind of a different animal along with the Russell. They're not doing the same. They're not acting the same. They're not doing it at the same speed, etc. Now the Dow does have a double top, and we do have an ER sell signal on the exact high day on the second high. That's great. On the way down, we're almost a new low ground like we did on Friday. Not quite yet. And it's not even broken out of its double top formation. It needs to close below the lowest low between the two highs. And that is right here at about 41,958. Yeah, let's call it 42. That's close enough. And we're at 42,248. So it hasn't even broken out. It might bounce off of that minor support area at the same time the NASDAQ gets to its minimum downside objective. So that's very much different. It's not even started. And the 1 minute chart making new lows like you would expect, with the other indexes doing the same thing. So it could break out today. And the Russell, very close to the low on Friday. No support immediately apparent at these levels, but a little bit of support a little bit lower. Now there's no double top here. All we have is the top of a major historical resistance area being tested way back on November 25th, Thanksgiving. And kaboom, down we went. The second rally in January never got close to the highs that we saw back in November. So no double top. But bear move? Oh, yeah. Okay, let's look at the 1 minute chart. Almost, and it just did apparently make new lows. These are all 1 minute charts. Just about to make lower lows than Friday. Continues to work lower. My downside objective, I don't have one for the Russell. Bonds. I am forecasting still. I may be wrong. I have been in the past sometimes, of course. That March 14th should be a low day. And I think the price is going to be about 115.11. Right in the middle of this little green circle I've drawn, because you have a shoulder on the left that's actually a little double bottom by itself. And that level is 115.11. And the amount of time from the middle of the little double bottom, first shoulder, to the bottom of the market, which is a bullish engulfing ER buy signal, and we caught both major bottoms so far. Again, back on October 23 of 2023, bullish engulfing green buy signal, a whopper. And this one so far has been awfully damn good as well. But now you take that time frame from the first shoulder low to the bottom of the market, and you measure, like I've done, right there's the yellow line. the exact same time frame. Let's move it to the left, and if you don't believe me, and there it is right there, the middle of the two lows. And to the right, okay, you take that time frame and you measure it to the right, and we are right on March 14th. That's the idealistic. Rarely does the market cooperate that accurately. So a little bit earlier or a little bit later, and a little bit means only several days, is the left and right side of my green circle. And we have entered today, that time frame is the first day, but it's going up instead of down. It's not at the lows. It's not even close at the moment. But I think it's going to slip again, and I think it's going to make new lows again, and I hope it comes very close to March 14th and 115.11. That would be just fantastic if I could pinpoint, which I have, but again, it's pretty rare that I come super close to my forecast like this. It's a little tricky, but that's the way it's done. So you now have an idea of when and where the last shoulder could, I hope, form, and then up we go. Up we go is damn important because not only does the head and shoulder bottom, which again started approximately November of 24, have an upside objective of 128, let's call it 129 almost. That objective, if we are able to get there, is a breakout of the broad 1.5-year double bottom formation, again, containing an ER signal, buy signal at the lows on both dates, the exact lows, both of them. So that's going to have a broad double bottom, a major upside breakout if we can get this head and shoulder to work in the first place and get up to 129 in the second place. Then the double bottom says we're supposed to go all the way up to 146. And that is my longer term. May take a year, may take longer, and may not take quite a year. It may still happen this year, although I doubt it. In the next couple of months, I think it's going to be, late this year. Now, I can say the same thing about 10-year notes, and I will, and I am. And the timing for the 10-year notes is a slight bit different. We are at the right point in time already. Now, I don't have that little timer measuring stick, so to speak, on the screen, but trust me, if you take November 15th to January 13th and count the number of trading days, you will end up with approximately a day or two ago, right smack dab where that low is. Did we form the last shoulder low? Is it very much higher than expected, but on time? Maybe. I can't tell. Certainly looks like it at the moment. But because of the bond chart, I think we have only few more days of downside movement. And then after the 13th or so of March, I think both are going to continue to work higher and trend higher. Next, crude, oversold, trying to bottom out, not doing a very good job of it, near yesterday's lows, around the current quote is very much around the previous two lowest closes for the move down. We're a little bit above the two lowest lows, and that was just made last Thursday and Wednesday. So it looks like we're about to break the low of Friday, but that's not super important momentarily. The major support area is just a little bit lower than Friday and Thursday and Wednesday's lows. So we could still jab down there one more time to get to support, get oversold again, and that's today, and then potentially start to bottom out. So I'm still a little bit bearish, but I'm starting to look for some reason to get bullish on crude. Not there yet. Heating oil oversold, new low for the trend down in the last 2 or 3 months. And it also is in a prime territory to start to turn around, but it hasn't done it yet. All I can say is support didn't hold, and we're in new lows, and we're oversold. So you've got some of the conditions that start a turn back up, but not quite as many as I'd like to see. I'm looking for a little bit lower levels, but not necessarily a lot, and we could be very soon in time ready to turn back up, but don't jump the gun. overbought conditions in natural gas. Way up on a sharp rally this morning. After a higher opening, it just shot up and pulled back real quick. Unless that's bad data, I can't tell with a daily chart. If you look at a 1 minute chart, for instance, you can usually tell a spike that looks really weird, and that would more likely than not be bad data, but sometimes not, especially if it took 2 or 3 minutes to get up there and back down. If it was only 1 minute and then, it opened and closed both at the lows of the minute, well, that could be one bad tick and bad data. So next thing you do is draw a tick chart and find out. Okay, so this could be topping out, overbought conditions, looking for it to come back into the support area and start to slip back into that range. And that's the yellow rectangle, starting at 4.36. Next, maybe a top building. Can't be very sure about gold. And for maybe a week now, I've been a little bit ambiguous. I don't want to say something unless I have a very good reason to. Right now, I'm kind of not sure. Silver could be forming a top in resistance, did not get overbought, not even close. And it's testing the bottom of the support range. So I really don't have a good comment for silver either. I'm sorry. Platinum is pretty much in the same ballpark. We're between a rock and a hard spot for a long, long time. Major resistance on the rallies has stopped it. Great sell signal in the exact high day back 5/20/24, and another great smack dab on the top of the market, October 30th of 24, and close, but not so great, a signal on February 3rd. Well, slightly profitable, but not really a great signal. It did make higher highs a week or two later. Now, again, probably a little bit bearish, and then maybe we'll turn back up again. Maybe we'll get oversold again. I don't have anything to say about platinum that I feel comfortable with. So high grade copper, sell signal on top, sell signal on top, buy signal on the bottom. We've got a few of them in copper. One, 2, 3, 4, 5, pretty much 5 in a row. Sell signals, all of them doing pretty good. Now, resistance stopped the rally, didn't get overbought. We're just down for the second day since last Thursday's rally high. A little support under the market. I can't be very sure about this. It could very well bounce off of that support and rally back. I'm not going to stick my neck out with a comment on copper at the moment. Soybeans, oil, meal, corn, wheat. Trying to make a case for long-term bottom formation. Beans are dropping off a little bit today. Doesn't do any good or bad for my story. Support is still holding in general. We did get oversold at a support level, and we did start to bounce. And that was last Tuesday, Wednesday, Thursday, and Friday sideways, and today we're down just a little bit. So I'm looking for another turn back up. I'm looking for new rally highs. Obviously, support has to hold, so I can't get below 1,000 and stay there and go down even more. That would start to kill my whole story and all of a sudden turn things very bearish, probably. Soybean oil, pretty much the same kind of commentary. Today's low did make a minor couple of ticks. New low for this dip down in the last couple, 3 weeks. I've got a little more elbow room down before I start pulling in my horns, bullish horns, on a long-term basis, so I can accept a little bit more weakness. We are oversold. That's in my favor. It could probably turn up very soon, and maybe we're forming a little double bottom here today. I can't tell yet. That's a possibility. And meal, dipping down a little bit also. We've got 4 important, well, 3 past tense, with the 4th one, question mark, in progress. I think so. I need to make a high higher than today's high, which is about the same as last Thursday's rally high. But again, it just bottomed out last week, so you don't have a lot of time behind you, and you certainly don't have a lot of move up. A nice rally, but not a whole huge amount. I need to close above this resistance area in the ballpark of 330 in order to get much more bullish much longer term. Meanwhile, it is still producing some sort of a bottom formation, I hope. I think that's my opinion. It could dribble off a little more, but not much. I'm very close to getting damage done to the longer term technical bullish story. Meal, sorry, corn, same kind of thing. This last low in corn could be a shoulder low. Now, I've already shown you, you may not have noticed that we've seen in the last year or year and a half some head and shoulder bottoms or tops that formed in a relatively short month or two, maybe three time frame, which were part of a larger formation, maybe another larger head and shoulder. So it's not uncommon to see formations inside of formations. Obviously, they're different time frames. But the same formation, the head and shoulder bottom, did form in corn. It did break out legitimately, past tense, December 30th or so, and it did get to its minimum upside objective. Fine. And that was on January 29th. So that pattern worked great. Nothing wrong. Forecast came true, went up a little bit more, topped out, and that would be February 20th, only about 2 or 3 weeks ago. Doggone. Sorry about that. Now, timing is good. You measure from this low, which is a bullish engulfing ER buy signal, to the bottom of the market. You get almost exactly the same amount of time from the bottom of the market all the way to last week. So the timing is perfect. Very accurate. The price level is a little lower than you would have expected. Usually they're around the same price levels. But if the neckline slants downward, which this does, although mildly, you would expect this last second low here to be mildly or a little bit lower than the first shoulder low. The whole pattern tilted, but this is a little more than a small amount. Nevertheless, on time, we have a bottom. It's not too low, so I think that's a shoulder. If that's all true, then this is a new, larger head and shoulder bottom surrounding an older, smaller head and shoulder bottom that already worked perfectly. This bigger one, now all it has to do is start to trend, like in the last 3 or 4 days, higher on the average. It's going to have downside corrections, but I'm looking for much higher levels. The minimum upside objective I haven't forecasted for you, and I'll do it right now, real quick and simple. Take the bottom of the market on the same vertical day, measure up to the neckline, and there you have the depth of the formation. I'm going to grab that little measuring stick, put the bottom of it at the guessing point as to when, I know what price because it's the neckline. If you close above, and I'm just giving it a few weeks, the upside objective, because the neckline is relatively flat, will go down slightly over time. But I'm going to tell you 630 plus upside objective. Huge move, huge. Let's see if it can happen. We have a triple bottom maybe, and sweet. Like what I see. Don't have a problem with that. Triple bottoms are very rare, so call it what you want. It got oversold. It made a new low. It couldn't stay below previous lows. It's now popping back up again, getting above a little resistance. That's good. I need it to close above, let's call it 623. Yeah, that'll work. In order to have a little bit of a breakout, and then above about 650, and that would be a significant upside breakout. Then we're talking an upside objective of 752 or a lot more. Next chart is cattle. We got the bottom of the market in cattle to the exact day last week, March 4th. Big up day on Friday, a little bit more strength today, new highs. That bullish engulfing is now past tense, working great. ER1 overnight, no problem whatsoever. ER1 scalp appears to have made a profit also on the day that it turned green. It's a scalping version of the ER signals. Remember, you've got ER1 scalping overnight, and you got ER3. I don't talk about that much, also scalping overnight. ER3 gets into the trade 1 or 2 or 3 days after the red or green signal day. If there's a retracement, and there is no retracement here, so we don't have a 3 fill, but 1 overnight, doing great. Next, hogs, oversold, got down to support, bottomed out, trying to turn up, has done so, new highs, now 3-4 days after the oversold condition at support. Too bad we didn't get a green bullish engulfing. That would have been great. We don't always. I'm looking for more strength, maybe even a test of the resistance at 95-ish. There is a small gap to close at about 92, 93 area. Next, we're back to the E-mini. The 1-minute chart says we did make new lows while I was yakking away here at about 10 minutes ago. You guys have a great day and profitable trading to you.